Hey, welcome back, everybody. Short trading week this week, but we've got another webinar for you today. It is Tuesday. We hit minus 14 here today in Wisconsin, so a little bit cold. But anyways, on to the markets here. As always, this info is for education and example purposes. Make sure you know your risk tolerance going forward. We just want to take a step back here and just cover the three main grain markets. So we're going to start with December corn. This is your monthly continuous chart. We broke it up into the third regions here, that we've experienced kind of since 2008. And we want to highlight that really prices, despite coming off the highs, aren't in a terrible position, right? I mean, we're in the mid third of the range. But that being said, I think it puts more emphasis on getting some of this old crop moved because we need to focus on new. Right now we have like a 2.2 billion bushel ending stocks number here in the US. If Brazil comes to the table with a good crop and then we get off to a good spring here in the US come April, May timeframe, that's where we might start to see this December market trickle down into the lower third range here. So, we really want to make sure we can take advantage of some of these opportunities without, a spectacular loss in corn crop production. I think it's going to be tough to get back into that, historical upper third. Here's the Chicago wheat, the July monthly continuous. And again, same as corn, we're hanging in that mid third. Granted, it is the lower end of the mid third. Where we've said we got a little more support as the ending stocks are a lot tighter on the US. Global stocks are certainly healthy, but we can still see a little bit of support here, in the US markets. But again, historically, there's some good prices. We think guys should take advantage of this stuff before, we move into that lower third. Beans, again, similar concept in here. We just don't spend a lot of time between that $11 and $13 mid third area. It's like corn and wheat, it's kind of a transition zone. So, again, historically good prices. Let's take a step back. I think these are worth, rewarding and putting in your marketing plan. Let's wrap this up. Like you said, everything's really in its mid third since 2008. The ending stocks are basically growing, especially compared to the last couple of years. So we believe that hedging on rallies is a good plan for 2024. We did a webinar a few weeks ago on defining rallies. Again, I think for us in this scenario, 20, 30 cent moves, things are starting to get into a downtrend. So you get a little bit of an up pop. I think it needs to be sold into. I'm not sure we're going to see the explosive rallies like we did in the past where we were in more of a bull market. Again, if stocks continue to grow, we can certainly head back into that lower third. You got to remember, it was only 3-4 short years ago that corn was sub $4. But of course, that led us into the environment we had the last couple of years. So you're going to need a significant stock drawdown to push back into the upper third. And really what it comes down to is high prices are going to cure high prices and low prices are going to cure low prices. And then we rinse and repeat on somewhat of a cycle. So in other words, the price incentive the last couple of years was there to get a good production, to get extra acres planted. And that's what happened. As we move through this transitionary mid-third area, the price incentive is still there, provided we don't have any major weather issues. You can start to see ending stocks incrementally increase a little bit again, and that's where you start to end up in that lower third, which now all of a sudden you disincentivize people to produce as much. So that's kind of what we're looking at. We wanted to just take a step back. Historically, we are in a good range. Sharpen your pencils, know your numbers, so you can do some good marketing here yet in 2024. As always, guys, hit that like button. Be sure to subscribe. We're trying to shoot to 600. Appreciate you tuning in. If you have any questions, let us know. Thanks.